We're back on morning movers, taking a look at Tesla once again. Shares remain under pressure this morning, down 6%, along with the ongoing market sell-off. Longtime bull Wedbush's Jan Ives slashed his price target on shares to 315 from 550, but he kept an outperform rating. Ives says Tesla has essentially become a political symbol globally and that it is, quote, a very bad thing for the future of this disruptive tech stalwart and the brand crisis tornado that has now turned into an F5 tornado. Time now for Options Corner. Joining us now to take a deeper look at Tesla, we've got Rick Ducat, lead market technician. All right, Rick, let's talk about the trends that we see when it comes to the chart for Tesla. It's been a difficult road this year.
Yeah, difficult for everyone. It seems like starting off this fresh trading week here with a lot of red. We can see Tesla, though, as of Friday's close, we've got a percent comparison chart. Tesla versus the auto sector versus its overall sector, consumer discretionary, versus the S&P. You can see Tesla has held up relatively well considering how difficult things have been kind of overall for stocks here. Still up about 38.4% as of Friday's close. Obviously, that's going to change significantly, most likely, once the market opens. But we can see here when we look at our chart, trending downward, a notable slide off of these highs near 488, down about 51% as of that close on Friday here. We can see as well that we struggled to retake our moving averages, which were starting to come together and grind sideways as the trend became a little bit more unclear as we established kind of this range here, this sideways boundary between about 290 to the upside and roughly 208, like a longer term downside area to watch, comes in right about at these levels. For the most part, though, we did hold on to this longer term upward sloping blue trend line here, but that's looking like it most likely will be not holding firm as we open up here. We are looking like we're going to open right below that level here. So that 208 level could be a noteworthy point to consider as a supportive area in the coming days. RSI also has broken its uptrend and failed to retake that 50 midline there. Now when we look at our standard deviation channels and volume profile studies, we can see we gave up our volume profile. The next point to consider right around here, this volume node near about 220 could be one area to watch.
All right, 220 could be one area to watch, and you mentioned that 208 level. Thanks a ton for the trends when it comes to Tesla. That's Rick Ducat, lead market technician. All right, time now to go through an example trade. We've got Tom White, senior options contributor and co-host of Fast Market. So, Tom, how would you go about an example trade for Tesla, especially in the context you have Dan Ives, we know is a longtime bull, has really joined the chorus of criticism around Tesla recently, although he's still got an outperform rating, but ratcheting down his price target. How would you structure an example trade?
Well, you take a look at the moves that we've seen in Tesla, as Rick mentioned, off over 50% from those all-time highs that we saw just in December. Implied volatility levels are at their highest in nearly 2 years. So option premium or extrinsic value is starting to expand here a little bit. So I looked at a strategy that, hey, I want to avoid earnings, which comes on the 22nd of April. So I looked at a strategy that's bearish, right? You can use this as maybe a speculative trade to the downside if you think it's going to continue to fall as a lot of their business has been washed away. Or maybe you're a stock owner of Tesla and you want to maybe protect some of those future downside risks on this. So went out to the April 17th monthly cycle. So expires in just 10 days. We're going to buy something. The stock looks like it's going to open up around 225 here today. So we're going to buy that strike basically at the money, the 225 strike. And then against it, to offset some of the risks on this bearish put purchase, we're going to sell the 200 strike put. So a bearish $25 wide put vertical. You're going to pay roughly, if we open up here around 225, you're going to probably pay about a $9 debit for that. So there's your risk, $900 per spread that can expand to $25, right? So your potential reward would be $1,600 on this. It takes your break even down to 216 on this one. So you only need a few percent move to the downside to get this thing to start expanding. Your max profitability is below the 200 strike. That's not out of the realm of possibility with the way that things have been trading in Tesla. Now, the key thing here, I think, over the next week and a half or 10 days to when this expires is by buying verticals, it gives you a lot of flexibility as far as trade management or closing out of the trade. So if this stock goes down to $200, this spread expands to $15 or $18. That's when you can start looking to see if, hey, do I want to close this early ahead of time? Do I want to take off part of my position if I did multiple spreads? So you've got that little bit of flexibility as far as trade management goes on a position like this, but it's definitely bearish. If you're not bearish on this name and you think it's going to rebound, buy a call vertical in here. It's the same type of strategy, but it's on the flip side where you think the stock's going to rebound. But maybe verticals, but it's got a high beta. It can move on a daily or weekly basis.
Okay, there's some flexibility with that initial example trade, bearish take. Thanks a ton, Tom, for that example trade. Shares of Tesla right now under pressure in the pre-market, along with a broader market action. Futures under pressure, though off the lows of the session, as it looks like investors will continue the sell-off that we saw to close out last week.